Hey guys, what's happening? Dan Darrow here with another Options and Play video update. Before I start, I just want to reach out to any of you that may have been affected by this weekend's hurricane. I hope you're all safe and sound and have made it through the other side of the storm. Um, okay, our thoughts are with you, obviously, and we want you guys back trading as soon as possible. But just stay safe and look after your family in the meantime. Uh, so um, so today's video is going to talk about a fresh trade idea for the week. It's going to be about Red Hat. Uh, After slipping up in June, the stock has presented us with the opportunity for bounce back quarter. So I'm going to go over the trade idea in a little bit more detail here. Uh, so first off, bounce back quarter trades are some of our favorite setups that we screen for earnings trades. And quickly, let's just use Red Hat to kind of as an example of what we mean by a bounce back quarter, and you'll see why Red Hat fits the bill for it. So using Red Hat, you can see that the stock had been in a really strong uptrend coming into this year and even started this year. You see really nice, really nice, solid, consistent uptrend, and then it actually started to accelerate a little bit. So there's basically two. So there's this longer one, and then there's a more accelerated trend, which happened starting in February. So basically, after that large market correction in February, it had a more aggressive uptrend. So it's basically like two trends here. Uh, Regardless, you can see the stock basically every single dip bought quickly. I mean, the pullbacks were very shallow. They tended to lead to a quick new high, and uh, you know that was partially due to the fact that tech was strong, that software stocks were strong, but it also was because the earnings for Red Hat were consistently strong. I mean, the company kept delivering. They beat and raised, kept the trend going. Really gave no reason for it to break. So I mean, highs the move never really got too far away. I mean, there would be points where it accelerated for away from moving averages, but then it would come back down, come back down. So it was basically in a really strong trend up until June, and then let's zoom in a little bit here. You can see that in June went into earnings, not at its high, but close enough to it. And what happened? They the earnings were solid, but they were disappointing, I guess, versus what the expectations were. And the stock was just hammered. So from 165 down below 150, and it sank over the next couple sessions following that all the way down into like the low 130s. So for a stock that hadn't closed below its 100-day since February of 2017, it lost all the higher moving averages. It lost the 100-day, and then it lost the 200-day a couple days later. So a stock that basically had not had a major pullback in 2 years, or a year and a half, excuse me, had a really sharp pullback to lose all these higher moving averages. Uh, since then, since then, Red Hat's been in a pretty steady consolidation. Been kind of stuck in a range, under maybe say like 140, so under 150, kind of steadily. Buyers have steadily moved up, so you can see that the people are starting to come back into the name, but it just hasn't had the catalyst or the momentum to like push it up into the gap. Uh, but now we have earnings coming up this week, and that's going to be a big catalyst. So what a bounce back quarter means is that we are targeting a strong rebound print, so a strong rebound for the actual numbers, and also the stock to revert back to its uptrend. So we want to see Red Hat get back above the 100-day first of all, which it's close enough above where it should be in play pretty quickly if the numbers are good. And then that's when the chart gets interesting because you have this really well-defined gap to 165. So I mean, above like this close term area of resistance in the 100-day, I mean, there's a wide open gap from last quarter. And a part of the appeal of the bounce back quarter is that you've seen it countless times, I'm sure. Like strong stocks tend to recover recent losses quickly. So there's a real chance that Red Hat could close that earnings gap quickly, and that's why when we see these setups, I mean, like they don't happen often, but we like to take shots on them when they do because you can see, going back a little ways, there was like Autodesk like earlier in the year. I mean, you get these opportunities, stocks that really have not had pullbacks in a long time, and in your first pullback tends to get bought back into pretty quickly. And if the numbers are good, there's a reasonably large gap sitting right above without a whole lot in between. And the weekly options, so like September 21st straddle for Red Hat is pricing about 12. But, I mean, from where it is right now, I mean, that's the close the gap from June would be about a $20 move. So it's up around 165. Currently it's at 145, so it's about $20. So options are priced in about 12, but there's a really obvious gap 20 points above. So that's when we like to say, like, there's a chance to get like that bigger than expected move because, technically it shows that, there's kind of like an open area sitting right above that 100-day. Clearly, it doesn't mean, just because we like the bull side here, I mean, there's obviously a chance that Red Hat disappoints again. And in that case, there's going to be more downside. How much, depends, I guess, on how bad or, maybe the overall risk environment that day. I mean, there's a lot of different factors, but, what we've seen over the course of, doing this is that these types of setups, they've favored the bull side. So we would prefer to lean to the upside into this type of setup because we've seen, like these types of patterns play out more favorably to the bull side. So in this case, we're looking at an October 19 expiration 160 170 call spread. It gives a shot. So 160 to 170. So it gives a shot. It basically kind of brackets that gap. So, the gap's at 165. The call spread's 160 to 170. It brackets that gap. Interesting risk to reward, especially when you have 165 as your target, what the options are what the options cost versus potential target. We just like the idea of that trade. So this trade's going out tonight. Keep an eye out for it. The stock reports later this week. So we'll see. It's a good different setup. Like I said, don't get too many bounce back quarters because it's kind of infrequent that you see such strong stocks get hit so hard. So these setups don't come around as often, but this is a great example of one that kind of fits the bill. So we'll certainly be watching it later this week. So if you guys have questions, comments, please reach out. Again, thinking about all you guys that are affected by the storm this past weekend. Please reach out. I'd love to hear from you. And best of luck trading, and I'll talk to you guys tomorrow.